Alrighty, welcome everybody. The webinar is starting in about 5 minutes, so we're gonna just let everybody join, and we're gonna take about a 5-minute break and let everybody tune in and get ready. So we're gonna play some music before, just to get the vibes ready. Hopefully you guys are ready to learn some crazy stuff tonight. All right, if you guys can hear me, type some messages in the chat. Type a 1 in the chat if you guys can hear me. Once again, you guys, if you can hear me, type a 1 in the chat or raise your hand. All right, I see some hands being raised. Perfect. We're going to start the webinar at about 8:05. So just giving some time for the attendees to join in. Hey, Brandon, can you see the chat?
Hey, what's up? Kind of. I'm only seeing like one question at a time, though, or one response at a time.
Once again, the webinar will be starting at 8:05. Just letting everybody know, giving some time for everybody to join in. In case anyone is wondering, this webinar will be recorded. You will have access to this webinar to look over as well. And it will most likely be put on the Forex Investors Alliance YouTube channel. Party starts in about 3 minutes, you guys. The first half will be Brandon Forexia, talking about EMAs, explaining his EMA mastery, how he has mastered the EMAs. The second half will be myself speaking on market structure and some of the secrets I've learned over the course of my time in the markets. The webinar could go about an hour to an hour and a half long, most likely an hour and a half long. All right, you guys, we're going to get this started. It's 8:05. First of all, a little introduction. My name is Dylan Forexia. I've been trading for a little over 5 years now. I've helped tens of thousands of students achieve a higher perspective of the market and its structure. I'm sure a lot of you guys are new here, and there's just as many people on this call that have been failing to achieve financial success or consistency in this market. If you guys have been trading for over a year, can you guys put a 1 in the chat? Let's see if there's anyone here that's been trading for over a year. All right, we can see quite a few people. Beautiful. Now, I have seen students take a year worth of knowledge and run with it, right? And actually be profitable with only a year's worth of knowledge, when there's some people that take 10, if not 20 years to become profitable in this market. Why is that? It's because of the knowledge that we have been taught. The knowledge that we have been taught, meaning the systems, the people that are teaching this knowledge to us as retail traders want us to fail. And this is the majority, whether it be the brokers giving out free knowledge or larger institutions. It's because they're on the other side. All right, there's a big gap in between profitable traders and losing traders, right? We know there's about 90 to 99% of retail traders are losing in this market. And it's because of what we've been taught, right? We have been taught to fail as retail traders. Now, I want you guys to watch until the end of this webinar so that you can get a full understanding of what we are teaching here. What you're about to learn in this webinar is unlike any other education that is provided. If you guys don't already have a notebook out, please put your phones down, turn the TVs off, and get your notebook out and cast your attention upon what is being said throughout this webinar. All right. There is a reason why 99% of retail traders fail. Like I said, it's because of what we have been taught, how we've been taught, what we've been told to do. I wasn't always a profitable trader. I was in the same boat as everyone else here, bouncing from strategy to strategy, from indicator to indicator, looking for that holy grail, or that something, at least something that would make me profitable. Whether it be using worthless support and resistance, filling my chart with indicators, half of them which I didn't even understand, to the point where I couldn't even see my candlesticks sometimes. You know, you see some people posting their charts and they have so many indicators on, you can barely see the structure of the market. This is a design, you guys. It's designed this way because structure is key. And you're going to learn this throughout this webinar. Structure is the only thing you need. All right. Brandon is going to go and overlay some EMA information and how to use EMA EMAs along with structure. Now, if you guys are interested in learning EMAs, I'm going to turn this over to Brandon, and he's going to give you some knowledge on what he knows about EMAs and structure. So, Brandon, take it away. You want to share your screen?
Yeah, share my screen for me, bro.
All right.
I think you're sharing your screen there.
Yep, I don't think I can share your screen for you, bro.
All right, let me do it. Let me see if I can. Sharing screen. Right, there we go. You have to stop. You have to stop sharing the screen.
Okay.
Right.
There we go.
And I'm not getting too good. Are you seeing my screen? You seeing my screen?
I don't see anything at the moment. You guys can you see the screen? Can you see Brandon's screen? Let's look in the chat. Type a 1 in the chat.
I can't even see the chat for some reason. Available only for presenters.
I know they can't see your screen.
I can't see. I'm seeing your screen, but I'm not getting to share mine. No one can see the screen. Click to start screen sharing. I'm not getting to click it. Yeah, I'm not getting to click it.
All right, one moment, you guys. Technical difficulties. This is our first ever time using this webinar software.
All right, I think I got it there.
Yeah, perfect.
Can everybody see my screen? Dylan, you will have to let me know if there's anything. Just
Yeah, bro, I can
yeah,
see your screen.
see the chat. All right. So, guys, what's up? What I'm gonna start with is, just to kind of like to get people a little warm. I just wanna like let Dylan tell me in the chat because again I can't see the chat, but like just tell me where everyone is from. I'm from Trinidad. It's actually quite hot here right now. It's 9 o'clock in the night. Dylan, if you could just call out some of the places some of the people saying they're from.
Yeah, we got some people from Jamaica, Texas, Trinidad, Australia, Arizona, Nigeria, Canada, Baltimore, Maryland. Nice to have everybody with us. UK, New York, Trinidad, New Mexico, Detroit, Alberta, California, Canada, Chicago, South Africa,
Wow,
France, Los Angeles. We got the whole world.
really cool whirling here
Thank you guys
tonight.
for tuning in.
Wow. Okay, great. Excellent. So now that we have a little warmth, right? We have a little piece of the entire world in here, right? I'm gonna give a brief history of me, right? Now, while Dylan has been trading for, as he said, about 5 years, Dylan,
Yeah.
right? I have been trading for only over 2, right? And he made a statement that people be trading for 20 years and never see success, right? Now, as most of my students would know, I am quite successful because of my mastery of what these EMAs, what they've done for me, right? And I wasn't always like that either. I was lost, right? As I always say, when I came into the industry, I was a lost puppy, right? I came into Forexia, introduced to Forexia by one of my friends right here in Trinidad, right? He knows himself, and I was a lost puppy, and I did not know my head from my toes. I didn't know anything, right? I didn't know what market manipulation was. I did not know what the market maker was. I did not know anything, right? And I remember one time, I took a trade and the trade was going against me and I moved my stop loss, and I just happened to message Dylan and ask him if he thinks, the trade is going to go a little further. And, if he thinks I should move my stop loss further into the loss. And, Dylan, he kind of buffed me up a little bit. He kind of argued with me like, yo, that's stupid. Don't do that, right? And since then, I don't think I ever made that mistake again. And it's the very same way I teach that very same principle. What I'm trying to say is listen to the guy, people. The man know what he doing, right? So I'm going to basically go over where, what I do, right? Because my style and my system is supplemental to Dylan's system, but it's a bit different, right? Where he would get his entries, mine would be a lot later, but I have the ability to capture the very same aggressive amount of pips with the very same tight stop loss and like little to no drawdown, right? So we're gonna go through a quick agenda, right? I have it written down. You don't get to see it, right? I have it here. But firstly, you need to have a basic understanding of price action, right? That is like literal, that's definite. You need to have a basic understanding of price action, right? So if you don't understand, if you can't see, let me see if I can find. Now you realize there are no EMAs, there's nothing. This is a naked chart, right? If you cannot see an M or W without anything on your chart, you need to go back to square one. You need to go back to plan A and understand these things first, right? You need to understand what these lines are, the period separators. You need to understand what the different days are. Today is Thursday. This would be Wednesday, Tuesday, Sunday, Monday, right? Look the gap, right? Well, Sunday, Monday, right? You need to understand these things. Let me see if I can find W1M, because as you know, this is what Forexia really teaches. Look here, right? Let me get my pen, right? Right? Go up, come up again, crash the market. Easy, right? At the end of the day, you need to understand these basic principles, and it's not hard. It's really, really not hard, right? You need to understand the session times, right? You need to understand that Asian session is first, then you have London session, there will be New York session, Asian session again. What is Asian session responsible for? That's the consolidation session or the accumulation session. What is the London session responsible for? This is usually, right? Usually the move, right? What is the New York session responsible for? This is usually the reversal, right? Dylan, am I right about that?
100%.
Excellent, right? You need to understand all of these things. Why are these things important? You need to understand manipulation. This was huge. I remember, I'm not going to call the individual's name, but I remember talking to an IML trader once, right? iMarkets Live. Yes, I'm calling their name in this webinar. And we were having a discussion, right? And I asked him how did he make out with the spread manipulation on the USD news, on the NFP news. And he looked at me like I was crazy, like what spread manipulation? What is that? Right? He had absolutely no idea what I was talking about. This is a teacher and a mentor to other people, right? You need to understand these basic principles. You guys want to know a secret? All of these principles can be found on forexia.net.
Hey, bro, 1 second.
Mm-hmm.
We got some people in the chat saying the organizer has sound muted. If you guys can hear Brandon,
can everybody hear me?
1 in the chat. All right, yeah, we can hear you.
All right.
Never mind. We're all good.
Right. All of this, the secret is all of this information with regards to the session times and the manipulation and the market maker, all of this can be found on forexia.net. Don't waste no time, right? Now we're moving on. We're going slow, but we're doing this incrementally. These things need to be discussed before I even discuss what I do. You need to have a trading plan. Plain talk, bad manners, right? That's a saying that, Trinidadians have. I don't know if any other places in the world see that. You need to have a trading plan. Your trading plan is your cornerstone. any trader or any teacher, any mentor who is not enforcing a trading plan on you when you're going to them, don't waste your time, because it's very possible that they don't have a trading plan themselves, right? You need to understand that this is not a game. This is a job. This is a career, right? And if you treat it like a game or you treat it like a hobby, you will get results like a game or like a hobby. You need to have a trading plan, right? There's no right or wrong way to create a trading plan, right? We can help you to create one, the teachers I'm speaking about, but there is no right or wrong way to create a trading plan. If your trading plan, if you know that, at 6:30 in the morning you have to feed your cat, and this is something that happens every single day, put it into your trading plan, because it is something that is going to affect your trading, right? Very, very important. If you know that you have a young kid and you have to feed your kid, you have to change your kid, you have to do whatever, put it into your trading plan, because it is now affecting your trading. Very, very important, right? Any trader who does not have a trading plan is doomed to fail in the long run. They may make profits here and there, they may make profits, incrementally, but then in the long run, they are going to lose money, right? There's no ifs, ands, or buts about it. I'm not asking you, I'm telling you, right? Now, we get into the interesting stuff, right? So a lot of you guys, I believe everybody who is here would be interested in understanding EMAs. And what does Brandon Forexia mean when he say hashtag EMAs told me? Or what does EMAs told me mean? Well, to understand that, you need to understand a lot of things first. Remember I said that you need to understand structure? Let's go even deeper than that. You need to understand the anatomy of a candlestick. What is the anatomy of a candlestick? Let's go. All right, so I'm going to get my pen. Let me choose the color. Let me get blue. All right, and pen. So we have this, right? Dylan, I need your help here with the chat, right? Can everybody tell me what kind of candle this is? Can you all just message in the chat? What kind of candle is that? What they say, Dylan?
Bull.
Bull, right? Very good. That's a buy candle, right? And then this, or the inverse, would be what? What they say, bro?
Sell. Bear.
Good.
Bear.
Very good. Right? Now, why is this important? Now, a lot of people don't understand. Just understanding how these two little things work could make your trading so much more profitable, right? So this candle here, this last one, let me just undo that. How do I undo? You know what? Whatever, right? Where does, what's the stats of this candle? So this candle would open here, right? High, low, and close. Can everybody confirm that for me? Just type a yes in the chat or no if that's wrong.
Yes.
Good. All right. And vice versa for this one, right? So this one would open here, high, low, close. This is known as the OHLC, or the open, high, low, close. Now, why is this important? Now, let's really stop and think for just one hot minute. The principle we learn, because as Dylan said, we programmed to do certain things when we now come into the industry. And one of the biggest things you hear in anything investing wise is to buy low, sell high, right? But if you think about what I just said, we don't do that, right? We don't do that. A lot of the time we find ourselves buying high and selling low, which makes absolutely no sense, right? So what I have done was found a way to utilize the closes of candlesticks to do just that, right? Now, it's not, you're not just going to randomly use this. You have to use this in relation to something. Now, let me explain. So let me just erase all this. Good, right? So let's just see. Let me get a block. Let's just say there was a zone down here, right? And let me change the color. All right. This is a blue candle, right? And there's a wick. And then let me get a red. The blue candle is closing up here, and the red candle is closing down here. Now this is a support zone, even though support does not exist. I do not believe support exists. I do not believe zones exist. I do not believe trend lines exist. I do not believe in any of these things. This is just for proof of concept, because this is what we as quote unquote retail traders are programmed to understand, right? But this support zone does not exist. But tell me something, when price reaches support, don't we buy? Can you guys just confirm that in the chat for me?
The support is in the minds of the retail traders only. It does
Correct.
not exist.
It does not exist, right? But we know that when price reaches on quote unquote support, we buy, correct? What is the chat saying?
Yes, 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 yes.
Good.
Yep.
No, no, okay, no problem. That's fine. I'm gonna show you. Now, you could buy here and have your stop loss here, or you can buy here and have your stop loss here. There's a key of very, very big difference in this being your trade and this being your trade. This entering on the red candle for a buy is what gives me my power, because what that does is it creates less drawdown, it creates less emotions and less entanglement in my brain. I always say this to a lot of my students: Forex or trading, anything in particular, is 10% technicals and 90% psychology. And I will explain all of that. That, what I just showed you, can be broken down into just this one term: buy a sell candle and sell a buy candle. The reason why I showed you a support zone is because that's what we are programmed to learn, right? We are programmed to learn support zones or support line, resistance zone, resistance line, supply and demand, and all of these different things, right? But how you are drawing this, let me show you. Let me get this. Let's just say this is what we see in as, resistance here. How do I know that this is actually resistance? If this is support here, how do I know that this is actually support? Who is validating this? No one. No one is validating it, right? There is no one to come. There's no person coming and, looking over your shoulder and saying, listen, this is correct. This is the correct area to draw support, and this is the correct area to draw resistance. And that's why Forex is so hard to teach, right? All of this ties back into the anatomy of a candlestick, right? Now remember, I said you have to tie this anatomy of a candlestick in relation to something. That, my friends, is where the EMA comes into play. So before I put it on the chart, let me just show you something. So remember, I said that you're going to buy a sell candle and sell a buy candle. So let's get the red. So the red candle closes like this, right? This is where the red candle is closing. You are going to buy this candle, right? Why? Where are you going to buy this candle? You're going to buy this candle when it is respecting some kind of dynamic support or some kind of dynamic resistance. Why do I trust this line more than I trust dynamic support? Why do I trust this line more than I trust true support? I will show you just now. Vice versa, right? You have blue
And
candle.
that line represents the EMA, correct?
That line represents the EMA, correct, right? Then you have vice versa. You have blue candles, right? And the blue candle is closing right here. And you have an EMA passing like this, right? Ignore the color. This candle is respecting the EMA. Now, let me show you something, all right? So let me clear all of this. Good. Right, let me get my, right. So I'm going to put an EMA on the chart. Now, I'm going to teach you all something again. The periods of the EMAs do not matter, right? They do not matter. I don't care what nobody says. I'm going to prove to you why they don't matter, right? I can use any number, any period, moving average, and trade with it and make money, because that's just how you just have to understand the concept, right? So let's say I'm going to use
It's 8:29 p.m. right now, bro. Use the 8:29 period moving average.
period moving average. No problem. Absolutely no problem. Right? So all you're basically gonna do, right, is buy when price is above the 820, because look at here, 829 period moving average, right? When price is above, you're looking for buys. When price is below, you're looking for sells. Simple. All right. You're going to basically be trading rejections, respect, breaks, or retests to this EMA, the one in question. Very simple, right? Very, very simple. Why? Let's stop a minute again and really examine what this line represents. First things first, you need to ask yourself, who is drawing this line? Let me show you something just to help you understand. Who is drawing this zone? I am. Who is drawing this line? I am. I am the trader. I am drawing all of these lines. This trend line, well, you know, I don't really have a trend here, but who is drawing all of these trend lines? I am. I am drawing all of these lines,
And
right?
it's all subjective.
And it's all
How you
subjective.
see the market and how
Exactly.
you view the market at that time.
Exactly. Who is drawing this Fibonacci? I am, right? I am drawing all of these things. If you want to go a little further again, who is drawing all of these, you know, this who is drawing all of this, right? Now, again, this is a harmonic pattern I draw in here, but I'm just trying to prove a point. You know, sometimes you see traders with 10 and 50 different things on their charts. As Dylan said, sometimes you could barely see the candlesticks. Who is drawing this line? Prices. I'm not drawing it. Dylan isn't drawing it, and you aren't drawing it. Price is drawing this line. In other words, this line cannot lie to you, right? It's very hard to understand how to utilize it properly, but don't worry, that's why I'm here. So remember I said you're going to be trading respects, rejects, breaks, and retests to this line, whatever EMA is in question. Remember, we're using the 829 period moving average, right? All I am doing is looking for respect and rejections to this EMA, right? I am honestly willing to take a 10 pip loss on every single trade for 10 trades in a row just to get one move that would give me everything back, right? Excuse me, everything, right? So let me see if I can find an example. So all here, right? I could be trading all of this. I may lose one or two. Let me see. I'm going to look for 10 pip stop loss, right? So remember, here's what you're doing. You're keeping your stop losses very tight, right? Your stop losses have to be very, very tight at all times. That is the only way this will work because you're trying to maximize your reward and minimize your risk. Simple, right? Always. You're always maximizing the reward and minimizing the risk. You remember you're buying a sell candle and selling a buy candle. You have a loss trade here, even though price would have went in your favor, right? You would have bought this because price is above the 829 period moving average, 10 pip stop loss. It would have gone in your favor, never hitting your stop loss until what? Maybe what, after a few hours. If after a few hours you see in 20 pips and you didn't close the trade, that's your business, right? This is a break. You're looking for a red candle to retest the top of this EMA here. There's no retest to the top of the EMA, so you look for no buys. There's no clear direction here. You leave this alone, and you're doing it again. Price came up aggressive, and then it stopped right here. Why? Why did it stop right here? Look at this respect. This is a run. Look at the number of the period of the moving average. Why did this candle respect this EMA so exact to the T? Right? That tells me something. I'm going to sell that because I'm selling a buy candle. Price is below the 829 period moving average, 10 pip stop loss. I took my loss. Simple. And I'm going to do that time and time again just so I can catch the perfect move. And I'm going to look and I'm just going to keep looking for the perfect move, right? I'm going to take all of these losses, right? Just to look for the perfect move. Let me see if I can get my 10 pip stop loss right here. Do I don't really get the 10 pip stop loss. What I usually suggest is when price comes as close to you want price to come as close to your line as possible so that you can get your stop loss below the line, because you have to remember that if price is going to retest anything, it's going to go run back to anything. What do you think it's going to run back to? It's going to run back to the EMA in question. Now remember, I'm using a very random period moving average here. This is not very, you're not going to find people using a 829 period moving average. This was just for proof of concept. But in theory, I could utilize this with a 10 pip stop loss and capture back everything, right? Literally, if it is I really wanted to, I could have put my 10 pip stop loss here and capture back everything. If I had taken 10 losses, I would have netted back everything, right? Look, another beautiful example right here. Why did this candle respect this line so exact? Dylan, did you tell me to use a 810 period moving average, or did I do this of my own accord?
Yeah, 829 because it was 829 when you were
Because
talking
it's
about it.
829, right? So, classic example, again, remember, this is not the holy grail. I am taking my losses. I'm showing my losses, right? I decided to enter the trade right here because I'm going to buy a sell candle. Why did this candle come down? Look at this. Let me get my pen. All right, let me change the color. Look at this big bearish momentum, aggressive, really aggressive bearish momentum, right? And then as it reached right here, it stopped. Why? At the 829 period moving average. Now that have to be saying something. I have a theory that candlesticks like to tell stories. Every candlestick has its own anatomy. It's like a fingerprint, right? The candles are telling me something. Why did it stop right here? Now guess what, right? You enter the trade right here to buy, obviously, because price is above the 829 period moving average. I'm looking for a 10 pip stop loss. Let me see. I can't even see the whole 10 pips. Look at that. I can't even see the whole 10 pips. So let's just, you know what? Let's make it a 7 pip stop loss. Right there. That's my stop loss. Was my stop loss ever hit? The trade just ran away. That's my trade. The trade literally ran away. So I would like literally take a 10 pip loss time and time and time and time and time again just to capture a move like this, to hold the trade, what, 1, 2, 3, 4, 5, 6, 7 days, a week. I had, so let's just say I had a 10 pip stop loss and what? The potential to make 302 pips. I mean, listen, somebody tell me if this isn't amazing. I mean, I think it's amazing. I think it's amazing, right? Now, like I said, I want to talk about retests just for a little while, right? A retest is, let me draw. I need to draw, right? The market will never, ever, ever do this. It will always do this. Always. The market never takes the elevator. It always takes the stairs. Agreed, Alan?
100%.
Okay, great, right? Well, obviously not with red, but you understand the point, right? This here, this move back down, this move back down, all of these could be retracements or retests. So let me show you something, right? Let me clear all of this off, erase all drawings, right? And let me get back this. Let me change the EMA just a little while, and let me make it 100 period moving average, just for ease of access, right? And let me make a line graph. What does that look like? I literally just drew this. The market is taking the stairs. Come back, come back, come back, come back, come back. The market is taking the stairs. Now the market is taking the stairs, yes, but it's taking the stairs in relation to something. It's taking the stairs in relation to the EMA in question. I'm using the 100 just to make things easy to understand. All right, let me put back the candles so that you can understand. Remember, all we're doing, buying a sell candle, selling a buy candle. Every time price comes close to this EMA with a red candle, you have an opportunity to buy. Simple, right? Every time price is above the 200, the 100 EMA, you have an opportunity to buy. Remember, we're using tight stop losses. Check this, right? Price came back down, aggressive. Would this be an opportunity to buy? Can somebody tell me in the chat? Could you guys confirm this? Yes or no? This one right here, this red candle right here. What is Dylan?
Yes, yes.
No, it's
We
not.
got one
That's
no. We got
actually,
yes.
this is incorrect. Reason being, remember we're using this line as a level of dynamic support and resistance. When price breaks support, can you buy? That's what we learn, right? If price breaks support, you don't buy because you don't know what's going to happen next. You want price to respect support. If we're using this line as support, since this candle broke below it, we cannot trust this candle because how am I so sure that this candle isn't going to continue down?
You
We are
mean the
looking
close? It
the
closed
close of,
below it,
yes, the
right?
close of this red candle here, right?
100%.
We're looking for respect. We're looking for price to continuously keep closing above so that we could continuously keep buying, right? You have, let me show you all the places you have opportunities. You have one here. You have all of these red candles here, opportunities. You have one here. You have one here. You have one here. You have so many opportunities. And the beautiful thing with this is if I really, let's just say I take the chance here, this is a 10 pip stop loss. If I put my stop loss right below the EMA, it's a 5 pip stop loss. Going again. This is a 10 pip stop loss. If I put my stop loss right below the EMA, this is a 6 pip stop loss. Risk to reward, my friend. This is a 10 pip stop loss. If you put your stop loss right below the EMA, this is a 7 pip stop loss. And you keep doing that. You could hold the trade indefinitely as long as you want. Now again, this is not the holy grail system. You're going to lose some trades, and that's okay. Because all you're doing is playing the risk to reward game, and that's all I do, right? That's literally all I do. I did a back test of Euro JPY, right? I hope you guys can see this, right? Can everybody just tell me if they're seeing this?
Yep.
Excellent. All right. This was over the last 14 days for Euro JPY, and I did this probably about 2 or 3 days ago, right? And it was just a back test showing the different trades taken, right? And the account, if you realize, again, people always say that, it's hard to make money in Forex with a little bit of money. That's absolute BS, right? The starting deposit was 200 US. I have an over leveraged system where, I could actually use big lots on an account this size, right? And Mean actually taught me this, right? If you realize, I am losing some trades, minus 10 pips, right? Minus 10 pips, but you realize it's never more than 10 pips being lost. And then sometimes you find plus 28, look, plus 99, plus 28, plus 20, plus 21, right? Plus 66. What happened after the 21st trade? So I'm guessing maybe this will be over the course of a few days, obviously, right? I'm using standards. And if you realize the account is growing, it's dropping back ever so often, right? But it's growing, and the account is growing. After 28 trades or 14 days, the account went from $200 to almost 1,800, right? I'm too tired right now to do the percentage gain, but the point I'm trying to make is it is entirely possible to make money utilizing a system that works, right? Now, let me go back to IC markets, right? The over leverage
Let
system.
me pause you 1 second, bro. We have a
Mhm.
question. What is the significance of the number 829? We just picked a random number for the EMA, just so it
Just to
was
prove.
absolutely random. It was
Yeah.
the time right now of that the webinar was. It was just a specific time.
Yeah.
And we have another question. How do you know when to close the trade, the take profit?
I'll go over that, right? So that's a beautiful question, right? Can I find out who asked that question so I can address you personally quickly, even though we want to hold questions for after? Who asked
Ernest.
you?
Ernest
Who?
Harvey.
Ernest.
Ernest.
Okay, Ernest. So remember I said that you want to minimize the risk and maximize the reward. So let's just say that I entered the trade right here, right? I entered the trade because price is above the 100 EMA. Price came back down to the 100 EMA and it rejected it. It respected it. It retested it, right? My stop loss would be right here. All I'm going to do is literally, I'm not using any take profit, but I'm utilizing my stop loss, right? I am going to manually be moving my stop loss along the 100 EMA because if price has to retest anything, what do you think it's going to retest? It's going to retest the EMA, right? So as price goes, as the trade goes, this is all I'm doing. You may be stopped out early. You may be able to hold the trade for as long as possible. That's where I probably would be stopped out, right? So where I had a 10 pip stop loss, I have the ability to make 98 pips by doing absolutely nothing. Anybody who tells me that this is too tedious to do probably should not be trading Forex because this is your job, right? This is your job, that's it, right? The reason being, now I want to kind of discuss something just before I continue, right? I'm running out of time, so I'm trying to kind of speed it up here a little bit. But the reason being, I want to kind of like do a kind of analogy, right? Now, again, excuse my drawing. I'm not using a tablet here to draw, right? I like to relate trades and Forex to things in the real world to make it relatable for most people, right? Amin says when I'm teaching, I teach like I'm telling a story. I believe that trades are like a nose, right? And you know with a nose, you have two nostrils, right? You have a nostril here and a nostril here. If something happens and you get sick, this nostril gets clogged. You have the ability to breathe through this nostril because that's why I have two nostrils, right? Trades are the exact same thing, and let me show you how. If I enter this trade here, right here, and I set my stop loss at 10 pips, and then I set my take profit at 10 pips, this is my entire trade. It's starved, right? Where I could yield my 10 pips immediately, I am now starving my risk to reward, right? My risk to reward is 1-to-1 all the time. The reason for utilizing the EMA basically is so that you can maximize your risk reward because it is a trend-based system, right? So in other words, I am always going to have a 1-to-1 risk reward minimum because once the trade goes 10% into my favor, my risk reward of 1-to-1 has been seen. I move my stop loss into profit, or I drag it further along the EMA in question. And as I said, the periods of the EMAs do not matter. All right. Um, Right. So, like, again, for those of you who really want an in-depth, because I just given like the concept here, for those of you who want an in-depth explanation or viewpoint of how I really do this, feel free to contact me after. As Dylan said, I love going over this kind of stuff with you guys. I did promise in this webinar to go over emotions, right? And this is the part of the webinar where I believe that I'm going to share the most value because let me give you guys a little insight, right? In this industry, we cannot control a lot, right? We can't control much in this industry. That which we can control, we need to control as accurately and as unreasonably as possible. We cannot control what direction the trade is going to go. We cannot control what direction the market is going to go. We cannot control what direction any given pair is going to go. You can, however, control your risk. You can control your money management. You can control your entries. You can control your exits. You can control your mind, most important. And guess what? With control of all those things, you get to control your income, right? Speaking of risk to reward, as I said, no a very tight stop loss, no take profit because you're minimizing the reward, but you're maximizing. I mean, you're minimizing the risk, but you're maximizing the reward. Why would you want to limit how much you make? That's not what you came into this for, right? So, at the end of the day, Dylan, how much time I have again there? Give me an average.
Can someone type a random number in the chat, 3-digit number? We'll pick
No,
any
no,
number.
Dylan, just now. Hold on. What? How long? How much time do I have again?
Oh, you can go for another 10 minutes, bro.
All right, good, perfect. Right, I will do that random number thing in another webinar. Right, I just want to finish these 1 or 2 points I have here. Right. Um, let me give you guys a little insight. The reason why 90% of traders fail is not because of a strategy, right? It's not because of a strategy. It's actually because of the individual trader who's coming into the market being unable to control his emotions or his psychology, which is why I stress so hard on the use of a trading plan earlier in the webinar, right? The truth is most systems, most of them, most, you hear what I say, most, not all, most of them are profitable when the right trader is applying them. Because Dylan is right here and he will tell you, never when learning the market maker method would he agree to using EMAs, and he right there. Dylan, am I wrong?
Well, I don't exactly use the market maker method. We have a person in the chat asking, the market maker method uses 12, 50, and 200 EMAs.
Right.
We also have another person in the chat asking how to add EMAs on the chart. Do you want to just show
All right,
you?
I'm gonna do that. Okay, so let me do that quickly before. Right. So this is your chart. This is on the computer. Obviously, it's a little different on your phone, but you come up here. You go to Insert Indicators. You will see Moving Average. If you don't see it here, you can go to Trend Moving Average. I use exponential moving averages because they're weighted a little better, meaning that just means that it reacts faster. Zero shift, you apply to the close, you can choose your color, and as I said, the periods do not matter, right? You can make it a 1 period moving average, you can make it a 687 period moving average. It does not matter. The concept is the same, right? And you click OK, right? The point I'm trying to make is EMAs don't agree with everybody, right? But the trader in question, right, most of the time, if he has a system that works for him, it's going to work for him and it's going to be profitable for him, right? The fact of the matter is the trader coming into the equation is what makes trading hard, right? I'm gonna kind of like finish up here now and kind of wrap up here now, saying that certain things are a mindset. Drawdown is a mindset, right? I don't care what nobody say. Drawdown is not something that happens with trading. Drawdown is something that happens in the mind, right? Because why is it that some swing traders could see hundreds of thousands of dollars of drawdown and not be flinched? They don't care because it's a mindset, right? Why you think when you open a trade, the trade goes into negative almost immediately? Because that's what the broker and the market maker want. They want you to be, psyched out, right? Over trading is also a mindset or it's a mind problem, right? You're doing good all the whole day. You wake up, you started the day good, you had a few profitable trades, you made some money for the day and you say, you know what, you're in the zone. And you decide, you ain't have no trading plan, you have no risk management, you have no rules, you have nothing like that. And you decide you're going to continue, but you're using 50, 60, 80 pip stop losses. And one trade takes back everything. That's you did that, not the market, right? Closing a trade too soon is a mindset, right? Because you don't know how far the market is going to go, and I completely understand that, right? I completely get that. But putting your stop loss into profit too soon and getting stopped out is not having a free trade, right? That's not a free trade, right? Allow your trade to breed. Otherwise, you have a mindset problem. Wanting to grow the account too fast is a problem. This is not a race. Doctors spend years and years and years trying to master the craft. This is not a game. This is not a hobby. You have to study. This is a beautiful one, and Dylan, I know you get this a lot, right? People trying to become successful in Forex without giving it the time, right? Agree or disagree, Dylan?
100%.
Without giving it the time. I get this a lot, right? People come to me and say, they want me to teach them or whatever, right? But they don't want to put in the time. They ask if I give signals and what you don't want to put in the time. That's not how this works, right? That's not how this works, right? And well, this last one I want to go over, like, trying to trade Forex without learning first how to do it from, somebody who understands what they're doing. It's not impossible, it's just really hard. And I'm gonna ask Dylan a question again. Dylan, did you personally mentor me, or were you like personally there mentoring me?
No, bro, you picked up everything.
So that's what I'm
Picked up.
saying. It's entirely possible to make it on your own. It's just very hard, right? But I get this a lot as well. People come to me and they put in money in accounts, right? But they don't want to invest in their education, and it's like counterproductive. You put in money in your account to do what? What are you putting money in your account to do, right? If obviously the goal is to trade it, but you're trading based on what knowledge or what system, what strategy, what method? You understand what I'm saying? Right? So, like I said, I kind of like going to finish up here now. I want to end with this, right, and kind of pass it over to Dylan. It is entirely possible to make it in the industry, right? You just have to want it. You have to want it more than anything, right? You have to make no excuses. Again, Dylan he'll be able to tell you that I studied ridiculous amounts. I always used to say study till your eyes bleed, right? You have to be unreasonable with your time, unreasonable with your effort, unreasonable with everything, right? That's all I really have for tonight, right? Because of the essence of time. Dylan will be taking over now. So any further questions, anybody who wants me to personally help them understand these EMEs a lot better, this was just a webinar, just to show the concept. All right, feel free to contact me after. Dylan, the floor is yours, bro.
Alrighty. First of all, bro, we have some questions.
Mm-hmm.
One question was what is the EMA on the screen right now? It's 100, right?
This is
100
100.
EMA,
Yeah.
100 moving average. Like Brandon said, any EMA can be used. All right.
Anyone.
Also, we had some questions about how to contact you, Brandon.
Contact will be in the Forexia group, right, Dylan?
Sure.
Yeah.
I'll actually let me take over, bro. Let me share my screen and I'll share the contact info.
Yeah. All you.
Alrighty. Let's see a 1 in the chat if you guys can see my screen. Alrighty, perfect. All right, to contact either Brandon or I, go to Telegram. Telegram is the messaging service we use. Telegram t.me slash DYLAN Dylan Forexia or t.me slash Brandon Forexia. All right, that's a link. You can type that into your browser right here, press the enter button, and you'll be directed to a chat with us. All right. All right. One of the things that Brandon said that I really liked was the market never takes the elevator. It always takes the stairs. 100% right. Have we ever seen the market go straight up like this for a very, very long time? No. It's always trending. Whether it's uptrending or downtrending, it's always going up and down, up and down, up and down, up and down, right? Down and up, down and up, down and up. This is how trends are made. Now, we're taught to follow trends, right? This is what we're taught as retail traders. The trend is your friend, so they say, until it reverses and hits your stop loss, right? How do you know when the trend is going to reverse against you, and how do you know when the trend is going to keep going? That's the secrets that are going to be revealed in this portion of the webinar. There is a structure behind the market, behind how trends are created and why trends are created. All right. We know as retail traders how to graph a trend, and we're taught that 3 hits to a trend line is supposed to validate a trend, right? So for example here, 1, 2, 3. And why is that? Because if you have 2 points, let's just say, this trend can very easily be just something like this, right? It can be whatever. But if we have 3 hits to a trend line, that apparently to the retail trading herd, that apparently validates the trend, right? That's what we're taught, that the 3rd hit to the trend line is supposed to be the validation, the confirmation to us that the trend has formed. Now, I'm going to show you guys that this is complete BS. What we've been taught has been for a purpose. All right, we're taught this for a purpose. We're taught to trade trends and go with trends for a purpose, for a reason. Price is moving in a trend, but price is moving in a trend for a reason. And there is a structure behind the movement of a trend. There is a cycle, and there are days of the week in which reversals must occur to make that trend, to form that trend, okay? Secret 1 we're going over is the midweek reversal. Wednesday, all right, what days of the week do we trade? Or what are the trading days? We have Sunday, Monday, and Sunday, Monday are connected because Sunday is like half a day, not even. And then we have Tuesday, we have Wednesday, we have Thursday, and we have Friday. And that is our trading week, right? There are specific days of the week in which reversals must occur because the trend, like Brandon said, does not take the elevator. It always takes the stairs. It must go up and down in a fluctuating movement. So, secret number 2, we're going over the Tuesday reversal. The midweek reversal happens on Wednesday and Thursday. If the midweek reversal does not happen Wednesday, most likely it'll happen Thursday. Now, this is not the Holy Grail. There is no such thing as the Holy Grail. There are some days of the week, some weeks, where the reversal does not happen Wednesday or Thursday or Tuesday. The second secret here is that there is a Tuesday reversal. Now, I have charted out a large amount of price movement in the past, and this is what we're going to go over. You'll see that there is an underlying structure. There is an underlying cycle to why the market moves the way it does, which days of the week move, and why they move that way, right? Secret 3, we're going over our signature trade. What is our signature trade? It's basically a wedge formation at either the high or the low of the day that breaks out. The wedge will break out to the high and then reverse, or break out to the low and then reverse off of that low or the high. So let's get into the midweek reversal and the Tuesday reversal. For short, I have midweek reversal written as MWR, and Tuesday reversal is just the Tuesday reversal. Okay, so we're taught as retail traders to go with the trend. Now, what happens when the trend becomes obvious? When a trend is obvious, for example here, we're taught 3 hits to a trend line. That's what validates the trend. We have 1, 2, 3, 1, 2, 3. Notice on this next hit, it's an uptrend, right? Retail traders are looking for buys because they want to go with the trend. We're taught the trend is your friend. You're supposed to follow the trend. Notice how much time the market spends in this area waiting for and accumulating retail trader buying positions, right? If this was an actual reversal off of this trend, the market maker or the dealer or whoever is controlling this will never allow you that much time to either buy or sell into the market. Now, the trend is always forming. There's always trends because retail traders trade trends, right? And there's always different trends forming, whether it's uptrend or downtrend. Now, there's trends within trends as well. Here's an example of that. We have a larger downtrend, and inside of that downtrend, we have an uptrend. So, with these reversals, all right, the goal of these reversals is to catch 50 to 200 pips with a 10 to 15 pip stop loss, right? This is how we trade the midweek reversal and the Tuesday reversal. We look for a spike or an M formation off of the high or the low of the previous day. Now, here is Tuesday. We are in an uptrend. Here's the high of Tuesday. Here's the high of the next day. Notice we have the signature trade as well, where the wedge formation is created. We have that breakout of the wedge. Why is there a breakout of the wedge to the upside? Because as retail traders, we're taught to trade this breakout of the wedge to the upside. We're taught to trade the breakout, right? So retail traders are buying into this breakout, thinking that, oh, they're going to catch this uptrend. When in reality, they're just getting trapped at yesterday's high. Why at yesterday's high? Because retail traders believe that a characteristic of an uptrend is creating higher highs, which it is, but that's also used against you. And you'll see right here, we have the high of Tuesday created here. If retail traders perceive this as an uptrend and they're breakout traders, they're going to be placing their buy stops right up here. What happens? A spike into that zone, come down, another spike into that zone above this one, right? Just in case there's any more buy stops up here, you got to catch them and then reverse. The reversal, like I said, 90% of the time will happen Wednesday or Thursday. Now, this example off of the high of the previous day, if you caught that, was about a 46 pip reversal. Now we're targeting 50 to 200 pips. So if we had a limit order, a sell limit order at the high of the previous day with a 15 pip stop loss, our stop loss would be about right up here. You could easily get away with a 10 pip stop loss and catch 50 pips. That's a 1 to 5 risk reward ratio. Let's move on to the next week. All right, we have, actually, let's go like this, you guys. Okay. The dealer creates trends. Why? Because we trade trends. Now, if the trend becomes obvious, then the dealer will not be able to make money if you're buying or selling into that trend and going with the trend and it's actually in your favor, right? The dealer's only goal, only job is to take your money, hit your stop loss, and reverse the trend in the opposite direction of the retail trader trend. So his job, Sunday, Monday, Tuesday, is to create that retail trend. And even sometimes Wednesday, they'll extend the trend and then reverse Thursday off of that low, right? I said it's off of the highs and the lows of the previous day. So if we look at Wednesday here, we have the low of the day right here. And once again, you guys, this blue marker, these blue markers are the start and end of each day, right? This represents a 24-hour period. With a 15 pip stop, if you bought right there, now this is just blindly buying at the low of the previous day. I don't want you guys just to blindly buy. You have to buy into a structure, all right? Whether it be an M or a W formation. If you just blindly bought off of the low of the previous day with a 15 pip stop, you probably would have, yeah, you would have gotten stopped out. But notice it's Thursday. Wednesday, the reversal did not occur. Thursday, you can expect a reversal if that, number one, the trend is obvious. Number two, the reversal didn't happen Wednesday. It's most likely going to happen Thursday. So what happens? inverse head and shoulder pattern to reverse the trend and hit stop losses of retail traders that sold into that trend. Okay? Off of that low was about a 80 pip move. Now, come on to the next week. Now, like I said, you guys, these reversals don't always occur, like, they're not always these massive reversals. Okay? Sometimes you catch a 30 to 50 pip reversal, and sometimes you catch a 200, 300 pip reversal. It's all about understanding the structure and understanding how to get the best entry. So once again, Sunday, Monday, we have the Tuesday reversal. We'll talk about that. Tuesday can reverse off of Sunday, Monday's high. All right. Most of the time, Tuesday will reverse off of Sunday, Monday's high or low. Here we can see price came within 13 pips of the previous day's high and reversed. Reversed for about 170 plus pips, 180 pips. Once again, we have an obvious trend forming. Once the retail traders are able to plot these trend lines, you guys, once it becomes obvious, just expect a reversal on one of these days, on one of the days of the week, right? Either the Tuesday reversal, Wednesday, or Thursday. Now, we can see Wednesday, they were still creating that trend. Thursday, midweek reversal, W formation. W formation, clearly obvious stop hunt on that second leg. This was if you caught that second leg of that stop hunt and you bought into it right here, you could easily have had a 15 pip stop loss, 15 pips, and you may have gotten stopped out by the spread, depending on where your broker has its spread. But that itself was a 270 plus pip move to the next week. Wednesday, Thursday, they reversed off of that high, right? Trend became obvious. Remember, Sunday, Monday, Tuesday, they create the trend for retail traders to follow. Why Sunday, Monday, Tuesday, you ask? Because Sunday, Monday is when retail traders are getting on their charts and looking at their charts. First of all, they don't have to work. Most retail traders, most people are off work on Sundays. And they've been waiting all weekend, or at least the entire Saturday, market was closed. So they're waiting as if it's like Christmas for market to open. They're just waiting to get into the positions. Sunday, Monday, Tuesday, retail trader is following that trend. We have the dealer creating that trend for retail traders to follow. Now, once again, the highs and the lows are key, you guys. Wednesday, the high is created. Wednesday, there was not a reversal out of this trend. Thursday, what do we expect? We expect a reversal. Notice where that wick went. That wick went exactly within a pip, basically 1 pip above the previous day's high. Why is that? To validate to the retail traders that it is indeed an uptrend. When in reality, look what happens. A massive reversal. If you had your sell limit at the exact high, you would have had 1 pip of drawdown for a 150 plus pip move.
Yo, Dylan.
Yeah, what's up?
some people asking how you get the days. A lot of people asking what indicator you're using.
Okay, yeah, you guys, here we go. So if you're using TradingView, I'm not sure how to do it on MetaTrader because I don't use MetaTrader. I only use TradingView to analyze. You right click and you go to time scale session breaks. That will put these on your chart. If you're asking about the days of the week, I drew these on here. All right,
That's what.
I did
Yeah.
all of this. So once again, M formation off the high of the week to reverse the market over 100 pips. What happens next? Create the new trend. And notice this. They're creating trends within trends. This is overall a massive downtrend. But does that mean we're selling just because it's a downtrend? No. You have to understand the structure of the market. Okay? Once again, Sunday, Monday, the high of the Sunday, Monday is right here. Tuesday reversal. Not a complete reversal, doesn't completely go 100 pips and reverse, but it is a reversal off of Sunday, Monday's high for about 30 pips, 28 pips. Creating that trend for retail traders to follow until it becomes obvious. Now, we have the Tuesday high right here. Wednesday, worked that high, M formation off of that high and reverse. Midweek reversal Wednesday. What is this as well? Can you guys type in the chat if you see what I see? What is right here? What is this? Yes, this will be recorded, you guys.
Signature, M,
Signature trade.
big M, small
There.
M.
Signature trade, Brian, 100%. This is our signature trade. You guys got to have the eyes to see this. Wedge pattern, the breakout is to the high. Breakout is to the upside, inducing retail traders to keep buying, right? It's a trap, you guys. This M formation, notice here. Notice all the retail traders, all these dumbasses putting their trend lines, putting their support and resistance here, thinking that this is going to bounce off this support and keep going, right? That's what they're taught. They're taught that this is how the market works. I've been in that boat. I'm sure you guys have been in that boat too. Well, that boat just sank today. M formation off of that high of the previous day, right? You can get on the signature trade, I have taken trades with a 1 to 10 to 1 to 20 risk to reward ratio. In the signature trade course, I took a live trade. It was a trade exactly like this. The exact same setup. It went 4 pips negative, had 4 pips of drawdown, and went 190 pips in my favor.
Wow. Wow, powerful.
If we had a buy limit at the high of this previous day, this is a 5 pips, 6 pips drawdown, maybe 8 pip drawdown with the spread to go 140 plus pips in my favor. Now, what did I say, you guys? Sunday, Monday, Tuesday is the creation of that retail trader trend for retail traders to follow. What happens Wednesday, Thursday, Friday? Well, that's when the retail traders are getting smeared. That's when their stop losses are getting hit, right? These pushes down, you guys, see these nice pushes here? This is to hit the stop losses of the trend followers that followed this trend. Also, where are retail traders that are buying into this trend? Where are they most likely going to be placing their stop losses? Most likely, they're going to be placing their stop losses below these lows. Now, let's look to the right. Look at how these pushes, push one, you have a push hitting the stop losses below this low, another push hitting the stop losses below this low, and then one last push to eliminate any stop losses below this low. All the retail traders that took this trend, unless they were buying right here, got stopped out, most likely.
Dylan, Tim is asking, are the reversals based on the first 3 to 4 days and the trend is obvious?
The trend can be up or down. So the days of the week, Sunday, Monday, Tuesday, it can be an uptrend or a downtrend. So
Right.
it really doesn't matter. It's just understanding the days of the week, and when the trend becomes obvious, look for a reversal on the days that there are a reversal, right? Either
Yeah.
Tuesday, Wednesday, or Thursday.
Yeah.
So once again, what's up?
Amar is asking, is this similar to the 3-level market maker move?
No, this is why, this is mostly why there are 3 levels in the market maker method. Okay, this is not the market maker method, you guys. The market maker method uses templates, indicators, a lot of different concepts that don't need to be used. Okay, it's a lot of stuff that you don't need to take into consideration. All you need to understand is the trends, how they form, when they form, and the days that there will be a reversal. Now, once again, the trend formed. What happens? Sunday, they take out most of the stop losses of those retail traders that plotted that trend. Now, notice here that I said Thursday and Friday is used to hit the stop losses, but it's also used to create a trend as well. This is creating that trend. Retail traders start following this trend. What happens? As soon as the trend becomes obvious, as soon as you can start placing these 2 little lines here, as if you can actually make money, as if it was this easy. You guys, they actually want you to think it's this easy. Just put 2 lines and buy in between the bounces. It's not. You have to understand the days of the week, the structure. Okay? Tuesday reversal, Sunday, Monday high. Didn't quite get to the exact high, but you get the point. M formation reversal off of that high. What happens Wednesday? Here's the low of Tuesday. Tuesday's low is right here, this candle. This next candle is Wednesday. This is the low of Tuesday. This is the low of Wednesday. Went to the exact low, and then what happened? Reverse. Reverse for 231 pips until the next Tuesday reversal, right? We have Sunday, Monday. Sunday, Monday, the high is right here. Where do we place our sell limit? We place our sell limit at the exact high. We have a 15 pip stop. And depending on the spread, you may or may not have gotten stopped out. If you guys want to use a larger spread, a larger stop loss, that's up to you.
Based on the broker, yeah.
But I like Brandon said, I can take a bunch of losses. I can take losses all day, all week. I can go through a week of losses and
Have one trade,
10
make it back.
pips, 10 to 15 pips to catch a 100 to 200 pip reversal. It does not matter to me.
Correct.
There is no holy grail in trading. No matter what strategy it is, you will have losses. Okay, we have the Tuesday reversal off of Sunday, Monday's high, reverse for the next 3 days.
D is asking, only entering trades during London or US session time important for the strategy? Or is the pattern of signature M or W of the highs or lows?
Understanding the highs of the day, or understanding, well, who asked that question, bro?
D.
The only entering trades, London. All right. Understanding session timing is important. I don't have enough time to go over that in this webinar, but it is very important when it comes to understanding these reversals, because you can see here, this was all of this movement here. This is Asian consolidation. 10 hours, okay? Pay attention to this. This gap, or this little line, this is the start of the new day. 10 hours into that new day is the start of the London session. So we have right here, 10 hours. Notice, London session starts at this candle right here. If we were to go into like the 5-minute chart, this would be an M formation off of the high, starting London session. You don't want to trade this unless there's a pattern, unless there's a structure that tells you. But I normally don't trade Asian session. This is Asian session. This candlestick right here represents the start of London session. I normally trade just London and New York, but that's up to you guys. Now, once again, an obvious trend formed. Obvious trend. We have 1, 2, 3 hits to that trend line. 1, 2, 3. Do you actually think that they're going to let you sell right here? Do you actually think they're going to give you all this time? Look at how much time that is, you guys. This is about 6 hours of consolidation at this trend line, as if they're accumulating sells right there. They're letting you sell for a reason. Now, if you guys see something like that that looks so obvious, it just stands out like that, turn it around. All right, turn your thinking around and say, all right, is this obvious? Is this becoming obvious? Am I going to get stopped out? Am I a retail trader? Am I going with the retail trader herd? And then understand the days of the week. So Thursday, reversal.
Lionel Garcia is asking if this works for all pairs.
All pairs. First of all, you guys, this structure does happen on all pairs, but I want you guys to practice on just USD based pairs for now. Okay? USD based pairs. You'll find that it happens a lot more often on USD based pairs, and the trends, the structures like this are a lot easier to see on USD based pairs. Now, we have 10 hours in is the start of 10 hours in from this line, right? Is the start of London session. Like I said, 15 hours in, so that's right here, 15 hours in is the start of New York session. So this candle right here is New York session. You can see this was the low of the previous day. W formation off that low of that previous day for about a 40 pip reversal, maybe 55 pips. and then the next trend starts forming.
Gerald is asking how to confirm entry based on the candlestick, or how to confirm entry if it's based on the candlestick.
The candlestick. All right. If you guys want to learn how to confirm your entry on the candlestick, I suggest you check out our YouTube channel. We have a bunch of videos on confirming entry and all this type of stuff. Forex, Investors, Alliance. Type that into YouTube. We have videos on confirming entry and a bunch of other different stuff. I don't have enough time to go over the candlesticks and confirming entry in this webinar. Now, same concept, Tuesday reversal. It came within about 8 pips of Sunday's high. Add the spread to that, that's maybe 4 or 5 pips. Then we have a 115 pip reversal. Thursday is that midweek reversal. W formation to start the new trend. The new trend starts. Once it becomes obvious, it reverses midweek. Here we have Tuesday's high. Notice these spikes. These two candles were once massive, big, fat green candles. Breaking out, breaking past the high of the previous day. One other thing to note is the reversal pattern, head and shoulders. Wednesday, we have the midweek reversal off of the high. This was about a 89 to 90 pip reversal.
Powerful.
Very powerful. Sunday, Monday, we have the high of Sunday, Monday. Tuesday, breaks out past that high, inducing retail traders to buy into it. Then we have that reversal. Tuesday reversal. Trusting market structure is key. So, this reversal, this trend here, we have, looks like as if it's creating an uptrend, right? Then come, not Wednesday, but Thursday, we have the break to Wednesday's high, just past it, just past that high, to confirm to retail traders to go long, and then the reversal. Head and shoulders. You have a buy limit at the high of the previous day. Excuse me, sell limit. And if you went with this trend, that's 875 pips. Now,
Wow.
you're probably not going to take that entire move. Let's just say you took the move till Tuesday, because that's when the next reversal is. Notice how we're in a trend, but the reversal days still happen. They're still respected, no matter what kind of trending environment it is. So Tuesday, Sunday, Monday. Sunday, Monday, the low is created right here. Then Tuesday, we have that one candle. What's this red candle represent? A breakout past the low of the previous day, inducing retail traders to start selling. Our buy limit is at the low, or you can wait for a confirmation. What's the confirmation? the second leg of that W. If you caught this second leg, that's a 50 plus pip move. Here we can see, like I said, you guys, this is not a holy grail strategy. Basically, an entire week where this structure wasn't really respected. There wasn't really any reversals off any of these days. Tuesday, Wednesday, well, maybe Wednesday. Well, Thursday, Tuesday, and yeah, you get the point. There will be days where there is not a perfect structure. But as you can see, all this movement, this has been insane, you guys. How it is respecting all these days, the days that we've said are reversal days. It always is respected. So most of the time. Wednesday, we have the Wednesday's low is created right here. And then Thursday did not quite get to the low. We have a 11 pips off that low. And then we have a reversal for about 60 pips. Until the next Wednesday, you can expect a reversal. What happens? Head and shoulders off of the low. Now, check this out. Can you guys see what I see here? Let's type in the chat, what is this? Can you see it? Can you see it clearly?
Sig.
Exactly. Shane, thank you. SignatureTrade. Why?
Flag. SignatureTrade. Signature. Flag. Where you see flag? Where you see my flag?
Breakout to the low.
Right.
Why? To
Correct.
induce retail traders to start selling. Selling with the trend, as if they're actually going to go with the trend, keep going with the trend after all this time. We have the low of Tuesday right here. They broke that low by about 15 pips, exactly, and then reversed off of that low for 165 pips.
Somebody is asking, Paula asked, what is the best time frame for SignatureTrade?
Signature trades happen on any time frame, you guys. In this case, we're using the 15-minute time frame, but there are macro signature trades. If you guys want to learn the different variations of the signature trade, I suggest you go to Forexia.net, check out our courses, check out the signature trade course. We explain the structure and the different variations. There are simple variations of the signature trade, and there are complex variations. Understanding that is probably the most important. Once again, we have Wednesday, and we have this obvious trend. Trend becomes obvious. Sunday, Monday, Tuesday. What did I say about Sunday, Monday, Tuesday? That's the days when the trend is created for retail traders. What happens then? A little inverse head and shoulder pattern off of Wednesday's low to reverse the market about 70 pips. Sunday, Monday, once again, we have the high of Sunday right here. Tuesday, Tuesday reversal off of Sunday's high. In this case, they broke out, inducing retail traders to buy. And like I said, you guys, it's not, you don't want to just blindly place your limit orders. Wait for a structure to show you a setup. All right. When I'm what I mean by that is wait for a day. Wait for in this example, we have Tuesday. We know most likely a reversal will occur. Not only is that price is respecting exactly this trend line, but we have multiple confirmations. Number one, it's Tuesday. Number two, we have the M formation off of the high or little head and shoulders here. And number three, understanding the timing, right? 10 hours in is London session. 10 hours into this, after this blue line right here. So we have the breakout. London session happens right here. London session move. And remember, London session is the breakout of Asian. So Asian session is this slow consolidation period right here. We don't want to trade this because there's nothing to trade here, you guys. This was a 30 pip move that happened in 8 hours. Another 30 pip move back down, another 8 hours. We're not into that. We're not into trading a bunch of hours just to catch a little tiny amount of pips. Okay.
Correct.
London session, M formation off the high, that's your confirmation to start selling. Also, within market structure, Tuesday reversal. We have a $300 pip reversal off of that low, or off of that high, Tuesday's high, if you kept going with that trend. Now, let's say you stopped yourself out come Thursday because you're expecting a reversal. Remember, Wednesday, why wouldn't you expect a reversal? Because they're going to use Wednesday to hit the stops of retail traders that were buying into this supposed uptrend. Right? You can see it now. Wednesday, they create the low. Thursday, work off that low, spike to that low, reverse. We have a head and shoulders pattern, inverse. For a 70 pip move, 60 pip move. Midweek reversal come Thursday. What is this, you guys? Once again, midweek reversal, SignatureTrade. All right, someone's asking, doesn't news matter? What you guys will see is that news doesn't matter. News is just to perpetuate this movement. Okay, why? Why do you think the midweek reversal happens on Wednesday? What's also in correlation with Wednesday and Thursday? If you guys go on Forex Factory right now and look at the past year of data on Forex Factory, the news, where you see the news, only look at the high impact news events. Filter it so that you can only see the high impact news events. You'll see that 90% of the time, most of the red high impact news events happen on Wednesday and Thursday. Why do you think that is? To reverse the market, to use the news as an excuse to reverse the market against the trend, that they made Sunday, Monday, and Tuesday. Tuesday, low is created, SignatureTrade breakout in one candle, inducing the sell one last time, reverse. This was a 200 plus pip move, 300 pips maybe. Let's see some ones in the chat if this is powerful, you guys. You guys learned something new.
One. Awesome. One.
Beautiful.
Excellent.
All right, we're gonna go over a few more examples, and then we're gonna wrap this up, you guys. Can you see what is here, you guys? Can you see this? What is this? Someone tell me in the chat what this is again. Midweek reversal? No, this is not a midweek reversal. Shane, thank you once again. Signature trade. Some people can see it better than others. This is actually a complex variation, a different variation of the signature trade. However, it is a signature trade. Once again, if you want to learn the different variations of the signature trade, we do have the signature trade course. So we have the wedge pattern, breakout to the upside first. Why? Because retail traders already know this is an uptrend, right? They've already plotted their trend lines. They want to go up. But the dealer knows this because the dealer is creating the trend. So what he must do is induce the buy so that retail traders place their stop losses down here. Then what happens? Hit the stops, reverse. Tuesday reversal off of Sunday, Monday's low. You had a limit order, a buy limit order off of Sunday, Monday's low. It would have went in 9.6 pips of drawdown, and you could have caught an easy 175 pips until the next reversal day. Come Thursday, we have that head and shoulders pattern off of the high. This is also in correlation with the London session. So 10 hours in, this candle right here, represents London session. So you see why we don't trade Asian session, because this happens. There's no clear movement, no clear structure. And it's mostly these little tiny candles that just make people mad. Tuesday reversal, Thursday reversal, midweek reversal off of the high, head and shoulders pattern, easy 100 plus pips. Create another obvious trend. Sunday, Monday, create that high. Tuesday, spike to that high. Not quite to the exact high, but they can open the spread. Remember that. Dealers can open the spread a good 5 to 10 pips at sometimes, depending on your broker. All brokers have different...
At the high or low, which is where they like to manipulate.
Exactly. The high and the low, like Brandon said, is where the market is being manipulated most of the time. And also, you'll see that the spread is manipulated at this blue line right here. This blue line, the end and beginning of the day, spread is always manipulated then. All right, we have Sunday, Monday, Tuesday. Create that trend for retail traders to follow. Remember that. Wednesday, what do we expect? A reversal off of Tuesday's low. So Tuesday's low is right here. We have that more complex version of the signature trade, right? Because it's a breakout to the opposite direction that we're thinking it's going to go in. But understanding that it's a different variation, we can easily know that It's just a different variation, and that there's going to be a stop hunt to hit the stop losses of retail traders placing their stop losses, most likely below the low of the day or the low of the previous day. So low of the previous day is right here. We have a stop hunt of 3 pips. 3 pips, open the spread, 5, 6 pips to reverse the market, 60 plus pips. Now, this was a news event. What did I say before? News is in correlation with the structure. So, once again, spike to the low. What is this confirming to retail traders? This is a spike past the previous low and past the previous low. So that's a confirmation that the market is creating lower lows, that the trend will keep going as a downtrend. When in reality, what happens, that news event was just used to manipulate the market and reverse to hit the stops. All right, one more time. We have Sunday, Monday, Tuesday, reversal, M formation off of Sunday, Monday's high. This was a 100 plus pip move. I'm just showing you guys the structure. If you guys would like to learn more about confirming entry, all of that, take the course. Trust me, it's worth it. So, what is this? Once again, here's a better example of a macro version of our signature trade, right? We have the wedge pattern forms. The breakout to induce retail traders to start selling, and then notice they work the low of the week. This is the low. This is the previous low of the week. This is the low of the week at the moment. Until Thursday, they create that new low, a lower low, as if the market is going to keep creating lower lows, because that's the illusion, right? That's the illusion, you guys. We're stuck in a spell. We're stuck. They've cast a spell on us that I don't know, that it's absolutely crazy how retail traders can not see this. Actually, it's not that crazy because, number one, they have hundreds of indicators on their charts that will never tell you this type of information. And like Brandon said, you're the one placing the indicators. Unless it's, for example, an EMA where price marks out the indicator, price paints the indicator on the chart for you. Most indicators like Fibonacci or all these different types of indicators is you doing the work, you doing that. For example, if you
making the input,
what's up?
you are the one creating what you see, and that's why it's so subjective. You're the one doing the inputting of this particular indicator or drawing.
Exactly. And if you're already assuming that the market is going to go up or down, then you will confirm to yourself
Correct.
just that by using that indicator. You will conform the indicator to make yourself, to make it, you'll conform the indicator to the trade, right? Now, we're just about to the end, you guys. I know this webinar went a little bit over the time limit, but hopefully you guys have learned a lot. So Sunday, Monday, Tuesday, reversal off of that high. This was the trade that I talked about that I took with a 10 pip stop loss and gained 190 plus pips. Okay, I had a sell limit. There were 2 sell limits. One sell limit right here and another one right here. This wick, this was my drawdown. This one wick, it was about 4 pips of drawdown. 3.4 pips. To make, my stop loss was right up here at 10 pips to gain 190 pips until the next reversal day, right? Thursday, because they had to use Tuesday, Wednesday, and Thursday to not only create the trend, but to hit the stop losses of retail traders that bought into this trend. All right, let's see a 1 in the chat if you guys are understanding this. Type a 1 in the chat.
1, 1, 1, 1, 1, 1, 1. 1, 1, 1, 1, 1, 1. Very good, very good.
100%.
1.
All right. Someone asked, Tim is asking, do they do this with cryptos too? I'm not sure. I'm sure there is a structure similar to this that is being used in the crypto market. But like I said, you guys, I'm assuming most of the people here are here because you don't have a strategy that works. This is something that will always work. The structure always has to be respected because, like Brandon said, the market never takes the elevator. It's always taking the stairs. There's always going to be a reversal, whether it's 20 pips, 30 pips, 50 pips, 100 pips, or 500 pips. We're using the risk to reward in our favor. So, Sunday, Monday, we have Tuesday, Sunday, Monday, Tuesday, Wednesday. Create that trend. Thursday is that midweek reversal. Check it out. What is this? Can I get a hand in the chat? What is this, you guys? Can you see it? Signature. Perfect, you guys. All right, you're seeing it. You're seeing it. You're learning something. Wedge formation. We have the breakout to the low. Why? Because the trend is going down. They have to induce one last time retail traders to the low, to the downside. In order for them, okay, picture this, you guys. There are 2 players in this market. There's the big boys, and then there's us. In order for the big boys or the dealers, the people with massive liquidity, they have so much liquidity at times that they can't fill their orders. And so they have to create structures like this to induce enough people to start selling so that they can place a massive buy order. Why? Because it's always a 1-to-1 ratio. For the people selling, there's always on the opposite end of the spectrum someone buying. Who is that buying? Someone is, meanwhile, you're selling here, someone is happy to give you a sell here so that they can buy. Why is that? Well, you can see it right here. Reversal off of the previous day's low. We have the low created here, a stop hunt of 11, maybe 13 pips. Look at these wicks, you guys. These wicks were once all red candles, inducing. On a smaller time frame, maybe 5-minute time frame, this is a perfect W formation. Not only that, but what did I say? 10 hours in is London session. Let's see. 7, 8, 9, 10 hours exactly. This candlestick is London session. The next candlestick completely moves out of that zone. Look at, what did I say about news being just to hit the stop losses and complete the structure, right? This was a news event right here, this candle. Can you tell me why it happened? To move out of this trend that they created Tuesday, Wednesday, Thursday.
They already trap people at the low on Wednesday, Thursday, so they can go back down there.
Boom. There's so much liquidity trapped down here. They cannot give that up. All right, you guys, we're pretty much at the end here. We went over a lot of structure. How did I learn this, you guys? How do you think I learned this? By doing the exact opposite of what we're told. And that's what I believe. I believe in doing the exact opposite of what everybody else does. Now, I took the time for myself to backtest without any indicators, without any templates. I took all that off, and I just backtested structure, just like how I showed you guys throughout this entire video. Just backtesting is how I learned this, and it's easy. Once you understand it, it becomes easy. You don't have to fear. You don't have to fear about, oh, maybe they're going to stop me out here because this or that. No, once you understand structure, it's all, the pieces all come together. So,
very powerful.
What does anyone have any questions? We don't have much time for questions. We'll answer a few, but otherwise we have to get the webinar is about a half an hour over, but I'm sure you guys are enjoying. How do we PM you guys? Once again, let's first of all, okay, here, 1 second. You can go to open a new tab and go t.me/Forex community, and you'll be redirected to our community chat. All right, this is our community chat. You can find all of the admins in here. If you want to PM us, you can go tm.me/Dylan Forexia or Brandon Forexia. And that's Brandon. That's me, okay? Send message. It's that easy. Feel free to PM us if you guys have any more questions. Also, I'd like to take a moment to show you guys the SignatureTrade course. If you haven't already, check out Forexia.net. This is our site. This is, we do have a free course, the M&W reversal pattern reversal course. Make sure you, if you haven't already taken this course, be sure to take it. You'll learn so much. All right, it's a 3-hour plus course, absolutely free. The SignatureTrade course, we will be holding a live webinar, another live webinar, but it's specifically for this course, and it's only for people that reserve a spot or enroll in this course from the dates July 6th to August 6th. So at August 6th, on August 10th, we will be hosting the webinar. But at August 6th, the enrollment period will be stopped. We will not let anybody else enroll so that we have enough time to create this webinar. Also, after August 6th, the price of the course changes to $2,500. And you will not have access to the live webinar. We will have a recording of the webinar, but you will not be able to ask questions or any of that. Currently, our course is priced at $1,475. You guys can make up your mind if the information provided today was worth that. We have a testimonial here as well if you guys would like to check that out. So the the different lessons on the Signature Trade course. What is the Signature Trade? This is actually a free lesson if you guys want to take that. The rest of the lessons are only for the enrolled students. Why and when does the Signature Trade occur? Timing the trade, confirming entry, variations of the Signature Trade, and the live webinar. All right. So, you guys,
I think that's about it. I don't really have anything else to say. At least not until the next time. I'm good. I feel great.
does this, how about gold? All right, you guys, once again, like I said, if you guys are new to this, if you guys are just starting to comprehend this, don't make it hard on yourself. Don't go on Bitcoin USD just because it's a USD pair and think that you're gonna master this. Go on something like GBP USD or USD CHF, USD Swiss. All right, we have the same structures occurring. Wednesday, Thursday reversal off of Wednesday's high. Okay, same thing. Don't make it hard on yourself, you guys. Don't beat yourself up. At least try to understand it on pairs like this that are easier, and then you can go on to more advanced pairs, maybe the crosses and stuff like that. Once again, you guys, if you guys have any more questions, feel free to ask in the chat. How to decide the endpoint of a reversal. Once again, you have to understand the confirming entry patterns and the candlesticks. I don't have time to go over that. That's another 1 or 2 hours just going over that. But it is in the Signature Trade course. We go over confirming entry. Yes, this course is different. The Signature Trade course is different from our advanced course. Our advanced course is basically, it's mostly for new beginners that want to understand market manipulation. That's what the advanced course is. We do touch up on the Signature Trade in the advanced course, but it's very brief. What is the smallest time frame you use? In this case, it's 15-minute time frame. Brandon, I know you use the 1 minute sometimes. Is it possible to trade EMAs on the 1 minute time frame or any time frame?
It's possible to use any time frame. I could trade EMAs on the monthly if I want to. I could trade them on the 1 minute if I want to.
Perfect. Is this how you mark your trades live with all the trend lines and labels? Yes, I always place the days of the week to understand them.
On TradingView, not on your MT4, right?
Yeah, I use TradingView as well. I use TradingView to analyze, and then I take the trades on my MT4. Yeah. I don't analyze with MT4. And once again, like I said, this is all done manually. I copied and pasted pretty much all of these days of the week onto the chart. Doesn't take very long unless you went crazy like this, like I did. But yeah, it's plain and simple, straightforward, you guys. Brandon, what time frame do you prefer?
I like the M15. I like the 15-minute, but again, there's no one time frame that I prefer because I guess it's what shows, what presents itself. I have a principle that is actually a part of my trading plan that I don't force the trade. I allow the trade to come to me, so I know exactly what I'm looking for. So if I open up here and I see what I'm looking for, I take the trade. If I don't see it, I don't take it. It's that simple.
Boom. How many currency pairs do you trade? Is it necessary for a multi-monitor setup? No, it is
No, it's
not.
not. No, it's not. And I trade
And
all pairs.
it's best to, when you're starting out, you guys, which I assume everybody on this webinar is just learning this. This is mostly new to you guys. Take one pair,
Yeah.
back test it, perfect yourself on that pair, and just do that pair until you're profitable with that pair. Why would you go out and start trading 10 different pairs just to confuse yourself? I mean, there's no reason to do that. However, you can if you want, you can mark up. For example, here I have a bunch of different USD based pairs that I mark up, and I'll take the pair that has the structure and the setup that day. Like I said, not every day there's a setup. And once again, I do not trade Sunday Mondays, you guys. Sunday Mondays is, there's no reason to trade Sunday Monday because the trend, there's no direction. At least Tuesday, there is sometimes a reversal off of Sunday Monday's high. I will trade that. Wednesday, Thursday is my bread and butter. That is the best day to trade because, as you've seen here, midweek reversals are imminent. Do you use Scotch and RSI indicators? Does it look like I use any indicators?
I think I already answered that, but all right.
Not a single indicator was used, you guys. Like I said, like me and Brandon said, most indicators are based off of you putting the indicator, you putting the input. And if you have a
Bias.
pre-bias of
Mm-hmm.
the market where you think it's going to be a buy, then you're going to conform your indicator to the buy because you want price to go in that direction. Are you not? You're going to
That's
be
your
looking for
mind.
buy confirmations.
Yeah, that's your mind entering into the market, and that's exactly what I said.
Exactly. Is it better to trade some pairs or just one? We answered that.
When,
Best to trade just
yeah,
one pair if
yeah.
you're new to this. Yes, we are posting the webinar to our YouTube channel. Once again, our YouTube channel is Forex Investors Alliance. Type that into YouTube. Be sure to subscribe and press that little bell notification and like this video if you're watching on YouTube.
Yes, this is Asian session. We are in Asian session right now.
All right, you guys, we're going to wrap this webinar up at about 10:15. So in like 2 or 3 minutes. Let's,
Yeah.
if you guys have any more questions, feel free to chime in.
Make sure they have the link to the actual chat. So if they have any other questions, they could direct them there.
Yep. Also, once again, you guys, the chat is t.me/Forex community. You can find me there, you can find Brandon there, and you can find all the other admins there. They'll be happy to help you out.
All right, thanks guys. Thanks a lot for joining in. That's me for the night. Time for bed.
Thank you, Brandon. Loved your the EMAs, brother.
Excellent. Thank you so much for the opportunity, and I myself actually learned something here again tonight. So beautiful, powerful, very, very powerful.
Do you still use the moon? The moon, lunar correlations. We do have some videos on YouTube on trading with the moon. Yeah, that's right. Literally using the moon to trade. Do I still use it? Yes. Yes. Not all the time, but yes, it's there. It's there to use. Is this like Steve Mauro's course? No. Steve Mauro, the market maker method, uses indicators. It also uses templates. We do not use any templates or indicators. It's a very different. And another thing with the market maker method is there are levels involved. There are a bunch of different concepts involved that are purely subjective, meaning just like the indicators, you have to plot them, right?
Correct.
And you will conform the levels to your belief in whether the market is going up or down. All right, you guys. I believe that is it.
Yep.
Even more than mine.
Oh god. That was a good end there, boy. All right.
All right, you guys. Webinar is ending right now. If you guys did enjoy and you want to learn more, feel free to look at the recording on YouTube. If you're watching the recording right now on YouTube, give it a thumbs up. And yeah, peace out, you guys. Hopefully
Later,
you
guys.
enjoyed. Hopefully
Bye-bye.
you learned something tonight. Brandon, any last words?
No, that's it. I think I'm good. Is anybody interested to learn more about what I do exactly? Feel free to message me, and yeah, and that's about it. Take the Forexia course.
Once again, to message Brandon, t.me/Brandon Forexia. To message me, t.me/Dylan Forexia. All right, you guys. Have a good night, everybody. Thank you all for tuning in. We appreciate your time. Once again, the YouTube channel is Forex Investors Alliance. Type that into YouTube, you'll find us. All right. Thank you guys very much. Thank you all for
Bye-bye.
tuning in. Have a good night.
Good night.